Good morning. My name is Alex Roget, Alexandra Roget. I'm a partner in the insurance recovery practice at Lathrop GPM. And the topic for today's webinar that is on everyone's mind right now, insurance coverage for coronavirus losses. Obviously, this coronavirus pandemic has caused tremendous economic hardship, particularly on small businesses, although big business is not far behind. And so the purpose of today's webinar is to give you a kind of a broad overview of the issues with insurance coverage and some recommendations on best practices. There's going to be a period of question and answer at the end of the broadcast, and we'll try and leave about 20 minutes to answer questions. So feel free to send in your questions as we go along, and we'll be able to hopefully answer them either within the hour or after the webinar is over. So as I said, that's me, Alex Roget. But let's talk first about the types of coverage. There are essentially two large buckets. One is third-party coverages that you may have purchased, and the other is first-party. The difference between the two is simply that third-party covers you for claims by third parties. In other words, if you're sued, if you receive a demand of some kind, these are the coverages, the policies that will respond. First-party coverage, which is probably the most important, is your coverage for your losses. You don't have to be sued. This is your property policy, and this is where most policyholders are looking for coverage. We'll start with third-party, but unless you've received a claim, this is not necessarily relevant for you today, but you should keep in mind that if you do get a claim, either from an employee or a customer, this is the coverage you'll need. So the first coverage here is commercial general liability. Anyone who's in business understands that they need to have general liability insurance. This covers claims against you alleging bodily injury or property damage arising out of an occurrence. An occurrence is defined typically as an accident or a continuous exposure to harmful conditions. This would be claims by customers alleging that perhaps they were injured due to exposure to the coronavirus. This could be also, I actually saw this morning that some lawsuits have been filed by employees at Walmart arguing that they were exposed to coronavirus through the course of their employment and that there were negligent policies and procedures in place. So employee claims will be dealing with separately under workers' comp and employer's liability, but this is the sort of claim that is covered here. Claims under commercial general liability policies also include personal advertising injury. These are, it's not necessarily self-explanatory what personal or advertising injury is, but in this context, you might see claims that for wrongful eviction, claims for false imprisonment or constitutional claims involving the quarantine. One can imagine perhaps a passenger on a cruise ship or someone else that's forcibly quarantined or forcibly evicted might have a claim there. So the coverage issues, the first question is there bodily injury here? Obviously if someone makes a claim because they've been infected by the virus, that would seem to be a simple example of bodily injury, but for claims involving negligent policies and procedures, perhaps medical monitoring, that's always a question, whether there's a bodily injury. Same with an occurrence. The good news, though, is that the standard for determining whether there's coverage is very broad when you're talking about a defense. In other words, most of these policies include a duty to defend, and that duty is based solely on the allegations of the complaint for the most part. So in the event that a claim is brought for bodily injury arising out of the coronavirus, I think there is a very good chance that absent any kind of virus exclusion, there will be a defense for that claim. Indemnity, meaning payments for a settlement or a judgment, are different. They're analyzed on the actual evidence and facts as they actually come out in the case, as opposed to what's alleged. But you know, there is commercial general liability coverage for third-party claims. Another type of third-party coverage that is important, and let me just step back for a moment and say that I think there's going to be waves of litigation. I don't think you're going to see it all come out as coverage cases brought against carriers. It's going to be first, perhaps coverage cases brought against carriers, but there will be other waves. And I suspect that we're going to see a lot of shareholder claims coming down the pipe, alleging that the directors or officers breached their fiduciary duties because they failed to properly account for the risk of an outbreak. They didn't properly account for it in the financial statements. They didn't properly account for it in their policies and procedures. Their preparation and response was inadequate. And as a result, the shareholders have lost value. Whenever there's a market downturn, as we've had, you can suspect and you can pretty much guarantee that the plaintiff's bar is going to eventually start bringing such claims. Your D&O coverage does protect against such claims. There are exclusions that might apply for bodily injury. However, the plaintiffs here, or the potential plaintiffs, are shareholders, not customers, not employees. As a result, the bodily injury exclusions that exist in D&O policies probably don't come into play. Another question is always in D&O claims whether the director or officer, the individual, was acting in their capacity as a director or officer, or whether they were acting in their individual capacity or some other capacity. That could potentially be a coverage issue, but it's not necessarily specific to COVID-19 or the coronavirus pandemic. That's always an issue. But at the end of the day, when these claims start coming in, it will be interesting to see whether there are exclusions placed on the policies, because unlike the commercial general liability policies, which are triggered by an occurrence, right, an accident, an event, the D&O policies are claims-made policies, and they are triggered by an actual claim being made. There has to be a claim made during the policy period. So if you have a policy right now that does not have a COVID-19 coronavirus exclusion, there is a strong likelihood that in the following year there will be one. And I suspect that the insurers are going to slap exclusions on their policies going forward. And because these are claims-made policies, it's really important that you make a claim now if you can. If nothing else, provide notice of circumstances In D&O policies, you can do that because you need to put your stake in the ground under today's policy because we just simply cannot guarantee that next year's policy will not have an exclusion slapped on it. So workers' comp and employer's liability are the last type of third-party coverage that I wanted to discuss. You know, workers' comp is there to protect employees for bodily injury and loss of wages in the scope that they incur in the scope of their employment. So it has to be a work-related condition. And, you know, to the extent an employee is at greater risk than the general public, or that they can prove that they were exposed at work or while traveling for work, you know, those are the employees that are going to get covered under workers' comp. Employees that just are at any greater risk than anyone else are probably not going to get covered under workers' comp. That doesn't mean that there's no coverage, but it just means it's not going to be under the workers' compensation part of your policy. Most workers' comp policies have an add-on for employer liability. That it works to essentially be a catch-all for claims that don't fall under the workers' compensation statute. These would be claims that by employees who, you know, were harmed, but perhaps they can't prove exposure at the place of employment or through associated travel. Perhaps these are claims brought by their family members for loss of consortium if they have passed away. And claims for additional damages. Workers' comp will only cover medical bills and lost wages for the most part, but if an employee is bringing a negligence claim, they may have various other consequential damages, and those would be covered under their employer liability policy. Again, though, you know, it remains to be seen whether or to what extent any exclusions are placed on these policies going forward. And here we go. This is the meat of it. This is why I'm sure most of you signed up for this webinar. It is the first party coverage, the property and business interruption coverage that, you know, is so critical at this point, especially given the fact that the stimulus bill, while certainly large and expansive, is not that these funds do not seem to be making their way to businesses in a timely manner. And time is not on our side, as they say. Time is of the essence. Most small businesses, meaning businesses with less than 500 employees, certainly businesses with less than 100 employees, they probably cannot absorb months of this going on with no revenue. This is an impossible situation. Even for big business, it's not known how long big business is going to be able to withstand this. So people are looking to their property and business interruption policies, and rightfully so. There's a variety of coverages available under these policies. They're listed here, but this is not by any means an exclusive list. There are various types of coverages available under your property policy that many may or may not apply. I just wanted to list those that are most likely to apply and that are really ubiquitous. The first is obviously property damage itself, which is not really at issue. No one's necessarily arguing that like a hurricane has come through and damaged property and needs to be rebuilt. The other is business income and extra expense. This is the loss of your income due to the suspension of your operations, all right? So there is, you can think about this in the most obvious kind of typical context where it would arise. Imagine a fire or a tornado comes through, damages your property, and then not only are you entitled to coverage to rebuild, but you're also entitled to coverage for the lost business for that period of restoration, as it's called within your policy, which is from the time of the allegedly physical loss or damage to your property and the time that you're able to resume operations. And that is not necessarily a subjective test. It's an objective test, meaning it has to be the period of restoration is limited by when you could resume operations with reasonable diligence and dispatch. In other words, you need to make efforts to get going as quickly as you can. That is, of course, under our current situation, perhaps not the key issue now. But when the stay-at-home orders are lifted and people can go back to work, it may be a question about whether or to what extent that's really possible. Civil authority coverage is really what most people are concerned about right now. This is the loss of business income due to an order restricting access to your location. Well, that would seem, on its face at least, to fall squarely within what's happening right now. You have most states, I think all states at this point, have some sort of, if not a stay-at-home order in place, they have an order in place that limits restaurants to takeout and delivery only, that is perhaps not a full stay-at-home order, but is limiting operations to just essential businesses. So this would, on its face, as I say, seem to clearly fall within the business interruption coverage. We'll discuss in a moment what the issues are, and there are issues, significant issues. But this is the authority, the civil authority coverage is the coverage that most businesses are going to be looking to get access to. Contingent business interruption is a supply chain coverage that protects you if, rather than a fire or a hurricane at your premises, there's a fire or, a hurricane, by way of example, at one of your suppliers or vendors' premises that make it impossible for you to do business. That's what this contingent business interruption covers. And many policies also have leader property coverage. So a good example of this would be if you own a restaurant or a hotel right next to Disneyland, and Disneyland closes down, as it has, whether you're closed down or not, you're going to lose business. So this is to protect you, again, much like the supply chain, if there is a property damage to a nearby property that you rely on to attract business. So here are the issues. And there's really two main issues, and one is the requirement that there is direct physical loss or damage to property. Okay. All property policies require some sort of physical loss or damage to trigger coverage. As you can imagine, with a virus, it's not clear. Certainly, it's not like a fire or a tornado. It is invisible. We can't see it. We don't know where it is at any given time. There is no ability to test right now. We just don't have enough tests to be able to determine who is actually infected. We've got a problem of asymptomatic people who actually have the virus and are contaminating various locations or infecting others, and they don't even know they have the virus. So, you know, the real question comes down to whether the direct physical loss or damage, the proof of which is on the policyholder here, because the policyholder has to prove that there's coverage in the first instance. The question is, does physical loss of or damage to property include loss of use? Or does it require some tangible physical alteration to property? A lot of this is going to depend on the case law in a particular state. Unfortunately, insurance law is a state-by-state analysis. It is not at all, there's no federal insurance code that governs. So it really, whether loss of use can suffice as direct physical loss or damage is really a matter of a state-by-state analysis. It may be that in one state, physical loss of use may be sufficient, and another it may not. Another question is whether, because the burden of proof is on the policyholder, whether a statistical or modeling type analysis might be sufficient to meet your burden. And what I mean by that is if you only have to show that there's direct physical loss or damage, i.e. contamination from the virus, whether in the air or on the surfaces, if you have to show that, you know, more likely than not, or 51%, then why can't you do that with statistics and modeling? It, you know, it would be novel to do it that way, but I think that may come down to a question of whether, statistically speaking, it is more likely than not that someone with the virus either entered your location or was infected at your location. The second issue is exclusions. There are two types of exclusions that apply. The first here is the pollution exclusion, and I shouldn't say that apply, that the insurers may argue will apply. Pollution exclusions vary greatly. Many of them do not include viruses or bacteria or pathogens as in the definition, but they all include the word contaminant. And so the question then is going to be, is the virus a contaminant, a pollutant? And the question, is not necessarily clear. However, I think we have good arguments based on the fact that an actual virus exclusion that we'll talk about next was introduced after the SARS epidemic for the very reason that there was some question about whether pollution exclusions were ambiguous, whether it was clear that they include viruses or not. And because the insurers were losing that argument, they were concerned that they would. They added an exclusion onto their policies, around 2006 or so. So, if all you have in your policy is a pollution exclusion that excludes contaminants, you may have a pretty good argument that the exclusion does not apply to viruses. I should have added also that the issue of direct physical loss or damage to property is not unique to any particular policy. It is going to apply across the board to every single property business interruption policy. It is just a trigger of coverage, and so all policyholders will have to address that issue. The exclusions that are slapped onto your policy vary greatly among policyholders. I also added here that coverage is offered via separate policies. We have seen for some policyholders, especially commercial real estate developers, they are likely to have pollution policies. In the mid 80s, when the pollution exclusions came into effect and started to bar coverage under general liability policies for environmental damage, the insurers started to develop, and in recent years, much more recently, since 2000, I would say, they've developed a separate policy that covers pollution liability. Some of those policies include business interruption coverage, some do not. But if you have a pollution exclusion on your policy, just consider whether there might be business interruption coverage under a pollution policy. And now we get to the virus exclusions. And really, this is the toughest issue to deal with, to be honest. You can see that virus exclusions can also vary. They're not all the same. They all say they will not pay for loss or damage caused by a virus. However, some of them include very broad language that says we will not pay for loss or damage caused by a virus, no matter whether there is any other cause concurrently or otherwise, directly or indirectly. So those exclusions, the broad form exclusions, are very difficult to get around if they can at all. Many state legislatures, for this reason, have started to introduce bills that would essentially require insurers to cover coronavirus-related losses, whether or not they have a virus exclusion. The first state to do this was New Jersey. Last week, Ohio, Massachusetts followed, and then I believe it was either Friday or Monday that New York followed. So I suspect we will see more of that. Of course, the minute that those bills were introduced, an army of lobbyists for the insurance industry descended on those legislatures. And at least in New Jersey, Ohio, and Massachusetts, there's been at least a tacit agreement with the carriers to come up with a counter proposal. In other words, they're rather than voting on the bill, they've asked the insurance industry, who is arguing that doing this would be unconstitutional, to come up with a counter proposal. Again, I'm a bit suspicious of these counter proposals. It is having, I admittedly am biased, as I've spent the last 20 years defending or prosecuting claims on behalf of policyholders against insurers, and delay is the name of the game. They hold the money, and so the longer they can hold on to it, the more money they can make. And it's really the part of the business plan, in my humble opinion. But we'll see what happens. I am cautiously optimistic that the state legislatures will take some action. But that remains to be seen. And then the last issue here, total suspension of operations. All of the business interruption coverage requires a suspension of operations. By definition, it's the interruption of your business that is covered. So some policies that we have seen require total suspension of operations, and some do not. Some define suspension to be just a slowdown in business. So it's important, because if you require total suspension of operations, then any restaurant, for example, that's still operating takeout and delivery would by definition not have their operations suspended. And obviously that is not that is not ideal from a policyholder standpoint, especially because all of these policies also require you to mitigate your damages. And what I mean by that is you need to take action to do whatever you can to stop the bleeding. The insurance company will exclude any loss that could have been mitigated but was not from its calculation of your losses. So you have an obligation to mitigate damages, which would seem to be completely contrary to any requirement of total suspension of operations. But it's just something that you need to keep in mind and take a look at your policy and make sure that it does not require total suspension of operations. For many of you, though, it may be that it doesn't matter because you have been completely shut down if you're not an essential business. But if you're still operating, even in some small respect, for example, the takeout and delivery, even for law firms, working remotely, it remains to be seen whether that has resulted in a slowdown, but it's certainly not a total suspension of operations. So these are just issues that we believe the insurers are going to raise. So recommendations. And we've discussed this as we've sort of gone through, but it's really important to make a claim. But we have insurers, brokers, and agents telling their customers, policyholders, don't bother. You're not going to get any coverage. Now, that may or may not be true, as we've discussed. There are arguments in favor of coverage, particularly for those policyholders who do not have broad virus exclusions on their policies. So there may also be some sublimited coverages that might be available to you that may not be available next year if there's an exclusion slapped onto your policy, and that, even if not covering all of your losses, you still may be able to, collect on, for example, decontamination costs. Many policies will cover you if you have to decontaminate your premises. So make a claim, if for no other reason than to just put your stake in the ground under this year's policy. Document your losses. Now, you may think, well, it's not very hard to document my losses if I'm shut down, but there are many coverages available, and they all are calculated differently. And so for the time being, before you make a claim, just make sure that whatever losses, whatever extra expenses, maybe it's the extra expense of having to go remote, or maybe it's the extra expense that you've had to incur to get your employees that are still working the proper protective gear, or there could be a laundry list of expenses that you've incurred. Just document that. Even if it's just, keep a drawer somewhere, a file on your computer where you can just dump information and documents. It's always easier to do that than it is to try and recreate it later. And information can certainly get lost, particularly in the chaos that we've seen over the past 30 days. It's also really important that you just don't take no for an answer. I mean, we have seen so many policies where people have been told, you know what, forget it. The broker comes in and says, sorry, there's no direct physical loss from a virus. These policies were not intended to cover viruses. Don't even bother. But talk to a lawyer that understands insurance coverage. It is very, you may have a trusted advisor that you go to, but if they don't understand insurance coverage, I would not go to them with a request to review your policies. It's very important that you seek qualified coverage counsel who understands coverage, who understands the arguments that insurers are going to make, who understands the counter arguments, and who can tell you honestly, you have a very broad virus exclusion. Unless the legislatures act, it's going to be very difficult for you to recover. Or, yes, you have a virus exclusion, but we've got some arguments around it. Or you don't have a virus exclusion, you've only got a pollution exclusion, and we've got really good arguments in that regard. So, but it's got to be someone that understands coverage. And I'm saying this because of the onslaught of negative information that's coming out of brokers and other professionals in the insurance industry. So just don't assume anything until you have actually gotten someone to look at your policies and to tell you honestly whether or to what extent you might have available coverage. So I wanted to leave this open for questions. We have gotten quite a few. Let me see here. So one of the questions is, given the anticipated level of claims, basically any and all businesses are negatively impacted, wouldn't the sheer volume of claims of this type bankrupt every carrier? That sounds like it's perhaps a question coming from the carrier side of the aisle. However, no, I don't think that the sheer volume of claims is going to bankrupt every carrier. The volume of claims, but carriers are not going to be, let's be very clear about this. One thing I do agree with is that the scope of the issue for carriers is large, right? If it really is the case that every single business is entitled to some coverage, that might be significant. But there are sublimits on a lot of these coverages. The civil authority coverage is often limited to 30 days. And as a result, I am, and for those with virus exclusions, for example, the carriers are going to deny coverage, and they're going to force policyholders to litigate, whether it's the issue of an exclusion or certainly the issue of whether the virus constitutes direct physical loss or damage or has caused direct physical loss or damage. So, no, I don't think that the volume of claims is going to bankrupt the carriers. And then people have asked what has been your experience, if any, with healthcare systems coverage where hospitals are forced to cancel elective procedures and lose substantial revenue. So hospitals and healthcare systems are likely to be in a small subset of policies where there actually is no virus exclusion, and there may actually be an affirmative grant of coverage for communicable diseases, just by the nature of the business. So I suspect that if a hospital has been required to cancel elective procedures and loses revenue, they may have coverage. But again, they need to seek qualified coverage counsel. Another question, if there have been extra expenses incurred, if there have been extra expenses incurred but no other business interruptions yet, do you still advise that we file a claim? Yes, because extra expense is a coverage under the policies. It's a separate coverage. from the loss of business income. It falls under the general category of business interruption. Some policies refer to it as time element. Some policies refer to it as business income and extra expense. But yes, you should make a claim. Question, have you had any claims actually accepted by carriers? And the answer is yes, but only for those where there has been some sort of proof of contamination. In other words, if there is proof, evidence that someone with the virus was on the premises or was infected on the premises. Those are the claims that the carriers are likely to cover, although they will certainly try to limit the scope of coverage just to, perhaps the decontamination costs or the costs related to that one location. Next question is, would coronavirus fall under a fungi and bacteria exclusion? No. A virus is not a bacteria. Okay, a bacteria is a microorganism that is alive. It is alive. A virus is not alive. A virus is essentially a parasite that needs a host cell to replicate itself. So no, bacteria and fungi are very different from viruses, and I think even the carriers might have to agree that they are. Other question is, we own a restaurant, we've been reduced to takeout only. Is a business interruption claim still viable? Yes. However, it depends on the language of your policy. For all the reasons we've discussed, it may be that you have a virus exclusion. It may be that your policy requires total suspension of operations as opposed to a slowdown. There may be a number of issues, but the fact that just on the face of it, the fact that you've been reduced to takeout only does not mean that you don't have a claim. And I think this is an important point because it doesn't cost you anything to make a claim. Your broker will do it for you if you direct them to. They may advise against it, or they may not advise against making the claim, but they may tell you that you're probably not going to get any coverage. So be it. Let them do that. But it doesn't cost you anything to make a claim. And it is an easy, usually done by email. You'll get some questions back about your locations and your business and who's been affected and so on. But the making of the claim itself is gratis. Next question is, does civil authority require physical damage to property? And the answer is yes. While it will depend on the language of your policy, I have yet to see a policy that doesn't require some sort of physical loss of or damage to property. Now, with the civil authority coverage, the way that would work would be either your property could suffer physical damage or property you don't own can suffer physical damage. So long as it's physical damage that causes the order of civil authority, you should have coverage. The question then is going to be whether you can prove that there has been contamination. Now, you might say, well, of course we can. I mean, look, people are dying all around us. People are getting sick. But the problem of proof may end up being, a key issue. And I think one of the ways to get around that is going to be through statistics and modeling, as I said earlier. An epidemiologist or a mathematician or some expert is going to have to take a look at all the data that we have and come to an opinion about what the likelihood is that your business has been contaminated in some way, whether that's through someone, a customer, an employee, or in some other way. So it is possible to get over that hurdle, I believe, but but it's a hurdle that everyone's going to have to get over. Next question is, if we retain coverage counsel and pursue this, does this impact our ability to obtain insurance coverage in future years? Probably not. And the reason is that, this is a case where your rates could, there's an outside possibility that your rates could possibly go up if you make a claim, but the reality is I have not seen that. Making a claim under a policy is not going to cost you anything in future years, especially if you have to pursue coverage through litigation. All right, and there was a question that, here we go. Does the standard exclusion of loss due to virus or bacteria preclude a claim, or do you think there's a valid argument for coverage to be made even if no legislative relief is enacted? I don't know, and that may be at the end of the day the ultimate question, because the form that you're talking about is an extremely broad form. The endorsement that's attached to some of these policies, it includes the language that it doesn't matter if there's another cause, whether it's a direct or indirect, or in any other regard related to a virus, it's not going to get covered. The answer is I don't know at this point. A lot of work needs to be done to figure that out. I can tell you, though, that those are the most difficult claims, and which is why the legislatures in 4 states have stepped up to the plate, because it is difficult to get around those. And will a recording of this presentation be made available? I believe so. It should be available on Lathrop GPM's website within a day or two, and it will be posted there, I believe. All right. So with that, we've got 15 or 10 minutes left, but without any further questions, I just want to leave you with the following, which is seek qualified representation. Don't take no for an answer and make a claim. Those are the key important takeaways. And don't make any decisions also about what you're going to do in terms of your business based on the availability of coverage. The most important thing is to mitigate your losses and stop the bleeding, because one way or another, you're going to have to this is going to take time to resolve with the carriers, and it's highly unlikely that you're going to get any resolution from the carriers in the short term, meaning within the next, 90 days. This is going to take some time. So while that is happening, you need to mitigate your losses. And for all the reasons we discussed, it's also important because it will mitigate any risk down the line, whether it's from a shareholder or a customer or so on, that you didn't take proper account of the virus, or you didn't put the right procedures in place, or you breached some obligation, whether fiduciary or otherwise. If you do the right thing now, try and mitigate your losses. The coverage issues will need to get resolved, but you need to act now as a prudent, uninsured, and at the risk of sounding a bit trite, don't let the tail wag the dog. Do what you need to do on the assumption that you're not covered, and pursue coverage, along a separate line, but don't let coverage dictate how you react to this. One other question we just got in. Can you argue that it was governmental order rather than the virus that caused the business interruption? I think that's tempting, but one of the issues that I think the insurers will argue is that, sure, it's the government order that caused the business interruption, but it was the virus that caused the governmental order. So, perhaps you can argue that the virus exclusion doesn't apply because the proximate cause is the governmental order. But the problem is you still have to show that there was some physical loss that caused the order to be put in place. And that physical loss is the virus. So that's a difficult argument to make. And I suspect, if you look at the case law, after 9/11, there were cases where policyholders argued that the grounding of flights caused business interruption losses for airports, for example, and vendors. And while some of those arguments, were successful, and it really depends on the state that you're in, many courts found no, it was not the plane crashing into the Pentagon or into the World Trade Center in New York that caused the orders. It was the fear of more damage, and the fear itself is not physical loss or damage. So it's a tough question. Another question, are employees of a large company who are on a commission, do they have the ability to make a claim under the employer's policy? Well, the employer's policy, again, employer's liability would cover them if they had some sort of injury. It's not at all clear that that would include their their failure to collect wages. If they'd have to be injured somehow. So I'm not really sure. I mean, the short answer to your question is yes, their loss of commission or income could be an element of their damages, but they still have to show some sort of negligence or injury. And then one last question before we part ways. If our business ceases because we work directly with schools, is it likely we will be covered? I think all the same issues apply, which is, do you have a virus exclusion? Can you show direct physical loss? The fact that you work directly with schools might make it easier for some of your employees to make workers' comp claims if they get ill, but I don't think working with schools is necessarily going to impact your ability to get coverage one way or another for business interruption losses. And with that, thank you so much for your time today. If you have any further questions or follow-up, please let us know, and we'll try to answer your questions. And we hope that you all stay safe and well. Thank you so much.